And it's the countdown to the union budget as the markets await the finance minister's speech just days away. The big question is, will the centre reach out for populism or will they prioritize growth and stability? The finance ministry will take stock of all the big picture indicators, GDP growth, inflation trend, divestment targets. Hersh sets the macro context.
Well, yes, let's first talk about the fiscal deficit, right? That's, the first thing that comes to your mind when you speak about the budget. And the fiscal deficit over the last few years has started to really burgeon, especially on the back of COVID. This time around, it's expected to be around that 6.2% mark, still elevated, but coming off from those highs, 9% plus in FY21 on a lower base. But regardless, above 6.5%, now coming down towards that 6% mark. And on the back of that, let's also talk about divestment, right? Let's look at the divestment numbers over the last, 5 to 6 years as they come up on screen. We have seen that the divestment targets have been upped consistently year after year, except in the last year, which is FY22, where despite, keeping the divestment target quite elevated, it was nowhere close to being met, which is why largely the divestment target has come off. 175,000 was the divestment target back then, only 5% achieved, and currently, around a 78,000 crore rupee divestment target, of which around 40% has been achieved, largely on the back of LIC. Moving quickly on, though, we'll talk about where capex is concerned and how the capex trajectory has been. Capex has consistently gone up and is expected to go up. In fact, you look at it from FY15, Modi government has continued to invest in capex. Really, that is what is driving, or rather as a key driver for economic growth, and that is expected to be the case this year as well. Let's also talk about growth, right? That is going to hold the key. The key is going to be to push growth higher. 6.3% is where we are pegging FY23 growth largely. Around that 6 to 7%, 6.7% to 7% mark is what it's expected at. So need to try and obviously push that number a little bit higher, and hopefully the budget does that. And let's look at CPI, which is another key component of the manner in which consumption happens in the economy. And the CPI trajectory has been going upward. So there may be a couple of components in the budget to address CPI, including maybe the personal tax as well as capital gains tax.